I think the investment outlook, to make it very simple, is as follows. We're all been waiting for Godot. Godot is the Federal Reserve. And we've been waiting for the Federal Reserve to cut since I remember. We even thought they would not even cut this year. We just had a nice, slower non-farm payroll to give us a little bit of hope of some cuts this year and a weaker dollar, but frankly, we don't really know. And that's quite determinant for Asian markets, as we can see from the yen, as we can see from pressure on the RMB, and as we can see from the fact that no central bank in the region dares cut rates whatsoever, if anything, hike rates like Bank Indonesia or others. So, we are in that kind of environment where everybody's waiting for Godot.
I think what you said earlier is correct, that the short-term forecast certainly is, I think, for higher rates for longer, and it seems to be a dominant theme. And I think against that kind of rate landscape and against some of that volatility that you mentioned earlier, what we're seeing certainly amongst our family office and ultra high net worth clients, and just by way of background, I run Asia Pacific for a large trust and corporate services business. So we have quite an interesting lens on what the family office and ultra high net worth market are doing through a lot of the fiduciary structures that we administer for them. So what we're certainly seeing in this higher rates for longer environment is a lot more emphasis on cash management products. They're becoming very, very popular. I think we're seeing with clients a lot of move into stores of value, commodities, some of the younger generation into the digital asset space. Another one that's very, very popular, and again, very much linked to that higher rate environment, is an increased interest in the private credit space. So a lot of the private credit funds here in Asia, you've seen an explosion in that space as traditional bank lenders have pulled back from lending, and the other providers of capital, typically in that space being private equity, are kind of currently, there's not a lot of transactions happening because there's big valuation gaps between sellers and buyers. And so into that space, a lot of the private credit funds have stepped to provide capital to portfolio companies. And so we're seeing a lot of the families and ultra high net worth investing in that private credit space. I think one other kind of change, which won't be new to anyone, is we saw a lot of the family office and ultra high net worth clients in the last couple of years who had a lot of levered exposure to Chinese property bonds and securities kind of get wiped out to some degree in 22, and we've seen a lot of that money moving now more into the US and into Japanese equities. But that's one thing we've seen. And then just a sort of, not so much a thematic, but what we have seen is a demand from the families for more kind of customized investment solutions. Stronger emphasis on a bespoke service. So, typical example, large family with single stock position that it's not able to sell, looking for very bespoke collared hedging strategies that kind of protect them on the downside and give them exposure on the upside.
You're right. I think that, in this time where there's so much turbulence and, the opportunities for where to invest and how to invest and, how to access those investments are really changing. You're right that fintech and broadly technology is the enabler for making this happen. And so when I look at democratization, I think there's two real themes that underpin democratization when it comes to fintech. One is accessibility and the other is education. And quite often you have both of those two as the core pillars for fintech. Now, in the more sophisticated markets, we see that play out with digital ways to enable access to some of the markets Robin's talked about, things like private credit, things like more sophisticated investment vehicles. Traditionally, they were very paper-based, very one-to-one, very hard to access, clunky experiences. Now, a lot of those experiences have moved into a digital format where they're more easy to compare. There's an ability to construct portfolios, and we're seeing the rise of, particularly in the high net worth space, in the rise of concepts like direct investing or customized indexes. And so, I suppose, in short, what we're able to do is bring both accessibility and education in a more curated and customized way to those higher net worth individuals, whilst also bringing accessibility and education to smaller portfolios and earlier stage investors in a more easy to access, lower cost, low friction environment. So, on one side we've got things like robos and easy to access investments, and on the other side we've got just the ability to build more and more efficiently in a more complex way without having to add layers of fees, layers of cost, or layers of complexity.
I think there is, if you allow me, I think there is one aspect that is quite interesting when you mentioned a bit the continuum of wealth segments managed with regards to what is important to retail or investors that are just embarking into their journey, all the way up to the ultra high net worth of type of investors. And I think you touched on robo, which is a very interesting element as to how democratization obviously is making its way through the different layers of financial literacy, basically, right? And robos have evolved, obviously, thanks to technology and fintech, to offer personalized investment strategies and enable folks based on their risk profile and their goals to really access what they need to create wealth, right? I mean, it started 15, almost 20 years ago with a convenient and transparent way to access a model portfolio made out of ETFs for investors to start dipping their toes into. And then that expanded, as we remember, in the mid to late 2010s into robos offering more diversified portfolios with access to different asset classes, bonds, stocks, even alternative investments, and also including functionality that went beyond just tell me what is your risk appetite and your goal, and I'll give you a portfolio. There was a lot of additional features in terms of rebalancing, tax loss averting, goal-based also. And that continued to evolve, right? That it continued to evolve with integration of AI now these days, machine learning, to enhance really both the portfolio management capabilities, optimize investment decisions or enhance portfolio performance, but also to increase the personalization of the investment recommendations and the investment opportunities that clients can have access to. And so, through this evolution, and the evolution is not done because now robos are coming into an hybrid mode. You have the intervention of humans in the middle of the digital journey, which really supports, both the education that you were talking about, Manish, but also the decision making of, the entire continuum, whether you're just dipping your toes into this wealth creation journey or whether you're an expert and seasoned investor already. All these aspects have come into play, and robo, I think, has really crystallized and encapsulated until now really the ability for technology to bring value across these different client segments, and catering increasingly to the exact needs of these different segments, right? I mean, a bank can now, and I'll stop with this, but a bank can now open up its offering and its proposition to a long tail of retail customers, mass retail customers, with obviously more narrow propositions and services and products than they would offer to private banking clients, but that has opened up the doors that I think investors across the board will benefit from. So I'll leave it at that and maybe comment further on another question.